My friends, I need you to listen carefully today because what I'm about to share with you might be one of the most important financial updates you'll hear all year. And it affects not just you, but your children, your grandchildren, and possibly even your great-grandchildren who are living under your roof or depending on you right now. Now, I know many of you watching this are seniors collecting Social Security, SSI, or SSDI, and you might be thinking, well, this doesn't apply to me because I'm retired and my kids are all grown up. But here's what so many people don't realize, and this is absolutely critical. If you're raising a grandchild, if you have an adult disabled child living with you, if you're caring for a great-grandchild because their parents can't, or if you're claiming any dependents on your tax return, you could be eligible for thousands of dollars that the government owes you right now. We're talking about a combined total of up to $3,900 per child. And I've been seeing so many seniors leave this money on the table simply because they didn't know they qualified, or they thought these credits were only for working families. That breaks my heart because this is your money, money that could help you pay for groceries when inflation is eating away at your fixed income, money that could cover medication costs that seem to go up every single month, money that could help you keep the heat on this winter, or finally fix that car that's been giving you trouble. So please stay with me for the next few minutes because I'm going to walk you through exactly who qualifies, how much you could receive, and most importantly, how to claim every single dollar you're entitled to before it's too late. Let me start by explaining exactly what these two tax credits are and why they matter so much, especially for seniors who might be supporting children or grandchildren on a fixed income. The child tax credit, or CTC as it's called, is currently worth up to $2,200 per qualifying child under the age of 17. Now, this isn't some new experimental program or proposal that might happen someday. This is real money available right now through the current tax system. And it's been expanded and modified over the years to help more families, including grandparents and seniors who are raising kids. Then there's the additional child tax credit, which can give you up to $1,700 more per child. This second credit is what's called a refundable credit. And this is where it gets really interesting for those of you on Social Security or SSI. A refundable credit means you can get this money even if you don't owe any taxes. Let me say that again because it's so important. Even if your only income is Social Security and you haven't filed taxes in years because you don't make enough to owe anything, you can still get this additional child tax credit as a direct payment from the IRS. I've talked to so many grandparents who thought they couldn't get these credits because they're retired and don't have what they consider real income. But Social Security absolutely counts as income for these purposes. Now, let me tell you who qualifies for these credits because this is where I see the most confusion, and it's costing people thousands of dollars. First, the child you're claiming must be under 17 years old at the end of the tax year. They need to have a valid Social Security number. And here's the key part that matters for grandparents and seniors. The child must have lived with you for more than half the year. They don't have to be your biological child. They can be your grandchild, your great-grandchild, a niece, a nephew, or even a foster child you're caring for. What matters is that you're providing more than half of their financial support and they're living in your home. I hear from grandparents all the time who tell me they've been raising their grandkids for years because their own children are dealing with addiction, incarceration, financial problems, or health issues. And these grandparents had no idea they could be getting nearly $4,000 per child to help with those expenses. The child also needs to be a U.S. citizen, U.S. national, or U.S. resident alien, and you must claim them as a dependent on your tax return. Here's something else that's absolutely crucial for seniors to understand. Your income level determines how much of these credits you'll actually receive, but the income limits are quite generous, especially for those of you living on Social Security alone. For the full child tax credit of $2,200, you need to have a modified adjusted gross income below certain thresholds. For single filers, including widows and widowers, that threshold is $200,000, and for married couples filing jointly, it's $400,000. Now, most seniors I talk to are nowhere near these limits, so you're probably going to qualify for the full amount if you meet the other requirements. But here's where it gets a bit more complex, and I want to make sure you understand this. The additional child tax credit, that extra $1,700, has different rules. To get this refundable portion, you generally need to have earned income of at least $2,500. But here's the good news that many tax preparers don't even realize. Social Security benefits, SSI, SSDI, and certain veterans benefits can count toward this earned income requirement in specific situations, especially if you're also receiving any other form of income like a small pension, part-time work, or if your spouse has earnings. Let me give you a real example so you can see how this works in practice. I heard from a grandmother named Margaret who lives in Ohio, and she's been raising her two grandchildren, ages 8 and 12, for the past 4 years. Margaret is 72 years old and receives about $1,900 a month from Social Security, plus she gets a small pension of about $400 a month from her late husband's former employer. Margaret hadn't filed a tax return in over a decade because she thought she didn't need to, but when she learned about these tax credits and finally filed, she received the full $2,200 child tax credit for each grandchild plus $1,700 in additional child tax credit for each child. That's a total of $7,800 that came to her as a tax refund check. Margaret told me she cried when she saw that money hit her bank account because she'd been struggling to buy school supplies, pay for the kids' dental work, and keep up with the rising cost of feeding two growing children on her fixed income. That money changed everything for her, and she's been getting it every year since. Now, let me tell you exactly how to claim these credits, because this is where people get stuck and end up leaving money on the table. You absolutely must file a federal tax return to get these credits. I cannot stress this enough. Even if you normally don't file because your Social Security isn't taxable or you don't think you need to, you must file a return to claim the child tax credit and additional child tax credit. You'll use Form 1040, which is the standard tax form, and you'll need to include Schedule 88-2, which is specifically for these child tax credits. Don't let the forms intimidate you. There are free tax preparation services available specifically for seniors through the AARP Tax Aid Program and the IRS Volunteer Income Tax Assistance Program, or VITA. These programs have trained volunteers who will help you file completely free of charge, and they know all about these credits for grandparents and seniors raising children. You can also use free tax software if your income is below a certain amount, usually around $79,000, through the IRS Free File program on the IRS website. Here's something really important about timing that could affect how much money you get. If you're eligible for these credits but you haven't been claiming them in previous years, you can go back and file amended returns for up to 3 years to claim credits you missed. Let me give you another example. If you've been raising your grandchild since 2021 but you never filed tax returns because you didn't know about these credits, you could potentially go back and file for 2021, 2022, and 2023 and collect thousands of dollars in credits you should have received. That could mean $12,000 or more per child sitting there waiting for you to claim it. The IRS isn't going to come knocking on your door to tell you about this money. You have to take action and file those returns, but the money is absolutely yours if you qualify. I've helped viewers file amended returns and seen them receive checks for over $20,000 for multiple years of missed credits. Now, I need to talk about something that affects many seniors who are raising grandchildren, and that's the relationship between these tax credits and your other benefits. This is a question I get constantly. People want to know if claiming these tax credits will reduce their Social Security, SSI, or SSDI benefits. Here's the good news. The child tax credit and additional child tax credit do not count as income for Social Security retirement benefits, and they won't reduce your monthly check by even a single penny. However, if you're receiving SSI, which is supplemental security income, the rules are a bit different. SSI is a needs-based program, and normally any additional income would reduce your SSI payment. But here's what you need to know. Tax refunds, including these child tax credits, don't count as income for SSI purposes as long as you don't spend the money within the month you receive it. So if you get a big tax refund in April, don't spend it all in April, or it could affect your SSI for that month. If you save it and spend it over time, It generally won't affect your benefits, though you do need to stay under the SSI resource limits of $2,000 for an individual or $3,000 for a couple. Let me also address a concern I hear from grandparents who are worried about conflicts with their adult children. Sometimes both the parent and the grandparent want to claim the same child on their taxes, and this creates problems. Here's the rule you need to know. Only one person can claim a child as a dependent in any given tax year. If both you and the child's parent try to claim the same child, the IRS has tiebreaker rules. Generally, the person the child lived with for the longest period during the year gets to claim them. If the child lived with you for more than 6 months and 1 day, and you provided more than half their support, you have the stronger claim. But honestly, it's much better to work this out with your adult child before anyone files to avoid delays and IRS inquiries. I've seen situations where families agree to alternate years, or where the parent agrees to let the grandparent claim the child because the grandparent will benefit more from the credits due to their financial situation. These are family decisions, and there's no one right answer, but communication beforehand will save you a lot of headaches. There's also an important strategy that many seniors don't know about when it comes to maximizing these credits, and it involves something called the Earned Income Tax Credit, or EITC. If you're raising grandchildren and you have limited income, you might also qualify for the EITC, which can be worth several $1,000s more. The EITC has special rules for grandparents and seniors, and it actually has higher income limits and larger credit amounts if you have qualifying children living with you. When you combine the child tax credit, the additional child tax credit, and the earned income tax credit, some grandparents are receiving $10,000 or more in tax refunds, even though they're living on modest Social Security income. This is life-changing money for people who are stretching every dollar and making impossible choices between medication and groceries. Let me also talk about what happens if you're a senior raising a disabled adult child, because this is a situation that affects thousands of families, and there's a special provision many people don't know about. Normally, the child tax credit is only for children under 17, but there's an exception. If you have an adult child who became permanently and totally disabled before they turned 24 and they meet all the other dependency requirements, you may still be able to claim them for certain tax benefits. While they won't qualify for the standard child tax credit, they can still be claimed as a dependent, which gives you a different tax benefit and potentially qualifies you for other credits. This is complex territory, and I strongly recommend working with a tax professional or one of those free tax preparation services I mentioned if this applies to your situation. Now, let me address something I'm seeing in the news and online that's causing confusion. There are proposals in Congress to expand these tax credits even further, potentially increasing the amounts and making them available to more families. Some proposals would make the full credit available regardless of income level, while others would increase the refundable portion or extend benefits to older children. While these proposals are important to watch, what I'm telling you about today is what's available right now under current law, not some future possibility. You don't need to wait for Congress to act. These credits exist today, and if you qualify, you should be claiming them on your current tax return. Any expansions that happen in the future would be in addition to what you're already entitled to. My friends, I want to close with this. If you're a senior raising children or grandchildren, you're doing something incredibly important and often incredibly difficult. You stepped up when your family needed you, even though you thought your child-raising days were behind you. You're managing on a fixed income that probably doesn't stretch as far as it used to, and you're trying to give these children the stable, loving home they deserve. These tax credits are designed to help families exactly like yours. They're not handouts or charity. They're tax benefits created specifically to recognize the financial burden of raising children and to help ensure those children have what they need. You've earned these credits through the care and support you're providing, and there's absolutely no shame in claiming every dollar you're entitled to. In fact, by claiming these credits, you're able to provide better for the children in your care, whether that's better food, better clothing, educational opportunities, or just a little more breathing room in your monthly budget. So here's what I want you to do today. If you're raising any children or grandchildren, even if you haven't filed taxes in years, I want you to reach out to one of those free tax preparation services or visit the IRS website and look into the free file program. Or even call your local area agency on aging and ask for help finding tax assistance for seniors. Don't let another tax season go by without claiming what's rightfully yours. And if you know other grandparents or seniors who are raising kids, please share this information with them. I can't tell you how many people I've helped who then tell me about 3 or 4 other grandparents in their church or their senior center who are in the same situation and didn't know about these credits. We need to look out for each other and spread this information because the government isn't doing a great job of making sure seniors know about these benefits. As always, if you found this information helpful, let me know in the comments. And if you have questions about your specific situation, drop them below and I'll do my best to point you in the right direction. Take care of yourselves and those precious grandchildren, and I'll see you in the next update.